Hi there. Today I want to talk about credit scores and why credit scores are such an important factor for me when I underwrite a hard money loan request. In fact, it's within the top 5 things that I look for when I put a loan into my loan portfolio. Top 5 things being number 1, loan to value ratio, number 2, property type. Like I said, I've talked before, I love residential, multifamily, and then small balance commercial loans, not including office and not including land. 3, I want to see property location. So again, core urban markets. 4 is going to be the exit strategy. How does the borrower intend to repay my loan? And then 5th being that credit history. So let's first talk about what is a credit history or credit report. How do they come up with these numbers? What numbers do I use when I underwrite a loan? And then common kind of feedback or pushback I get from borrowers and brokers about poor credit history. So first off, what is a credit score? A credit score is simply a score that is given to an individual based upon their credit history. You really have 3 main companies that provide credit scores: Experian, TransUnion, and the 3rd is going to be Equifax. And when you do a credit report, typically you pull what's called a tri-merge. This is your credit report from all 3 of the bureaus, and each actually has their own criteria that they use to calculate the credit score of an individual. So credit scores again range from 300 all the way up to 850, 300 being on the poor side, 850 being on the best side. I've yet to ever see a credit score at 300. I feel like that's like an SAT score where all you had to do was write in your name, and then 850. And again, I think that's like the holy grail that no one has ever had. If you've ever seen somebody with an 850 credit score, go ahead and comment below, because I just don't think they exist. I've got good credit. I have never had a late payment, and I've yet to get to an 850 credit score. So what are the determinants of a credit score, and how do you get a good versus poor credit score? Well, number 1, it's going to be payment history. All right, have you made your payments on time? And when you get a credit report, they're going to break it down to kind of 4 factors: 30-day late, 60, 90, and 180 plus day late. So you're actually going to see on each credit line, so when I say credit line, for example, like a credit card, how many lates there have been on a specific line of credit. The other factors that go into a credit score is how many actual lines of credit you have. So you can imagine credit companies here have these algorithms, and if you have more credit hits or things that they can base their decision on, it's going to be a better predictor of your credit. So if you have no credit lines, then obviously they can't really give you a credit history. We actually see that occasionally where borrowers just do not use credit cards or borrow any money, and those are always difficult ones to underwrite. The other items is credit usage. So how much usage you have on your credit card. So imagine if you have a max credit line of $10,000 and you're constantly using $5,000 or greater, or over 50%, that will negatively impact your credit score, even if you've made payments on time. So if you're trying to keep a good credit score, always try to keep usage below 50%. In fact, I've read some articles where you try to keep it below 30%. And then we talked about the number of credit lines. So those are the main factors that kind of make up a credit score. So when I go through the application process with a borrower, what I'll first do is just ask them what their credit history is. And the number that I'm really looking for is 675. And there's no rhyme or reason why I use 675. It's just based upon my experience that if you have a credit history below 675, you've probably got a lot of lates on your credit history. Maybe you've got some write-offs being that you went ahead and just stopped making payments, and then that creditor went ahead and just wrote off the loan. You may have a BK in your history or something that has really negatively impacted your credit. If you're above 675, I find that maybe you have 1 or 2 lates, but they're explainable. Maybe they didn't get the check or something happened. You don't have a big history of lates. And the other thing that you might get dropped closer to 675, especially if you are doing private money loans for fix and flippers, is they have high usage on their credit lines. In fact, I've seen people that have perfect credit scores that have, or perfect payment histories with credit scores in the 650 range, simply because when they're buying and selling houses, they may have high amounts of debt at any given time, and that drops down their credit score. So in those cases, you can make exceptions, but you really just kind of want to understand why the credit is what it is. So again, I use 675 as my credit. Running credit. So if you're an individual investor, you're going to want to run credit through a mortgage broker or the broker that brought you that trust deed investment. As a mortgage brokerage shop, we have access to running credit on borrowers. Now, when you run credit, you also want to do a background check on the borrower. And I won't go into what a background check or what it is, but really you just want to make sure that this person, if they have any criminal record or current criminal record, you're going to want to know about it and make a decision if that's a loan that you want to move forward with or not. So again, we talked about a 675 credit score. When I run credit, now occasionally mortgage brokers, when they bring loans to me, they'll run the credit for the borrower, and that's okay. I'll accept that credit report. However, I want to see that was run within the last 3 months. Things can drastically change with somebody's credit, especially if they're going the hard money and lending route. So you want to make sure that you have a current credit history. The one thing I did kind of skip over is when you check a credit report, what is it that you actually get? You actually get a very detailed report on the credit history of that person. A lot of cases, it's going to be 20 plus pages, depending upon how many credit lines they have. It's going to give you a credit score. It's going to give you their current accounts. It may list out all their derogatory accounts. And then it's going to give you kind of a written assessment of that credit and why it has been negatively impacted. So if they have a large number of lates, it may say high number of lates written right there. So that's something, if you're not familiar with reading a credit report, you can see at the bottom of the report that it's going to show that. So a common pushback that I get from borrowers, especially ones that have poor credit, is the first biggest one is going to be, well, Brock, I have a lot of equity in my property. My credit score shouldn't matter. And this kind of goes in this idea that all hard money lenders just fund people with bad credit. And it's so far from the case. I mean, I'm funding only people that are above 675. There's obviously hard money lenders or investors that will invest in lower credit scores in order to get a higher yield. It's just I find that if I lend to people with credit scores below 675, they're going to be problematic borrowers throughout the entire duration of the loan. And I'm just not interested in managing a loan like that. So pushback, again, a lot of equity. You should do the loan, Brock. Things go bad. You still have got a very low loan to value ratio. Well, again, that may be the case, but kind of like a bank, I'm just not interested in trying to chase down payments. I'm not interested in going through a foreclosure process because it's very costly and time consuming. The other thing that I get from people that for credit is number two. Don't run my credit. I don't want you to run my credit. You shouldn't have to. I'm going to run your credit. And it's almost like a red flag to me if they tell me that they don't want their credit run. And that also goes along with credit that's run 6 months ago. Again, I needed something done within the last 3 months and even hopefully sooner. And the final kind of pushback that I get, especially with borrowers that will release their credit and they have bad credit, they'll come down and say, look, Brock, this is a refinance loan. I'm taking the cash out to pay down my debts. Okay, that's going to instantly put another red flag on me because number one, what are you in a refinance situation, especially a cash out refinance situation, what are you going to use the proceeds for? And if they tell me they're going to use them for personal use, that's a loan I can't do. I can only do non-owner occupied but really for business purposes. So even if it's a non-owner occupied loan that they're doing cash out, if they're going to use those proceeds to pay down personal funds, those still are considered to be non-business purpose loans, and you will be subject to consumer regulations and consumer laws. So if they tell me that, hey, Brock, I'm going to pay it down, and let's just say it is for business purposes, let's just for right now say it's business purpose, there's a high likelihood that they're going to find themselves right back in to the same reason why they had poor credit to begin with. So it's kind of like that thing is like, look, things never change. I just, based upon my experience, people that have had poor credit say they're going to pay it down and get it straightened out, typically don't ever do that. And you're kind of stuck in this loan, and it's maybe the borrower's paying, but they're never able to get that credit history back to a level where I'm going to get a clear exit strategy. Remember, one of my biggest factors is how am I going to get repaid? My repayment is based upon the borrower's ability to fix their credit. well, that's putting a lot of faith in somebody to be able to pay you out of a loan, and that's typically a loan that I don't chase after. So hopefully this was helpful as to why I look at credit score. It's a big factor in my underwriting. Let me know if it's something that you look at. Let me know stories that you've had where, you know, you trusted the situation even though they had poor credit and maybe it didn't turn out right, or maybe it turned out well. But thanks for listening. If you like this video, give it a like. We're going to post a ton of other video content about how I underwrite transactions, and definitely check those out on my channel. Thank you.